Support and resistance. So this concept sets the basis to technical analysis. What I mean by that is I actually know traders that are profitable only by trading with support and resistance. So what is support and resistance? Well, a support is when price goes down, finds support and reverses. Simple. Resistance is the opposite. So price goes up, finds resistance and goes back down. So here's an image so you could really understand it. Here, price goes up, finds resistance, down to support, resistance, support, resistance, support, breaks the resistance, finds a new resistance, and the resistance that was before becomes support. So an image that you could think of is support is the floor of the house where price can't go any lower, and resistance is the roof of that house, the ceiling that you can't go above. So that's of course really a theory image. So let's look real examples. So here we could see, let's use the arrow, sorry. We could see a support there, another support here, found support there, here. Okay, so you could basically see where price found support. However, what we want to see is levels, so lines where there was multiple supports or multiple resistance. So where can we see some? Well, we could see some here, for example. So we can see here a nice little support. Price found support here, and again here, and once again here. 3 touches. Nice. So can we see any other? So let's think that resistance becomes support. So there's actually a really big one. I don't know if you spot it. So it is this level. All right. So we could see price found support here, resistance, 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 became support after breaking. Support again, support, support, resistance. So that's a key area for basically trading positions, because the whole idea of supports and resistance is to find your support and resistance, because these are levels where the probability of trades reversing is high. So we can see, for instance, here we've got support, resistance, resistance. Well, when price went up here, we could have thought, well, reversed here, why not enter a trade? Let's short it. Stop loss above. Let's short it. And then bam, nice profit. 3.53 risk to reward ratio, which is really nice. We'll see what all that is about. And yeah, so we need also to know that there's different types of support and resistance. There's minor ones and major ones. So for instance, this is a major resistance and support level, because the more touches there is, the more important that level is. So if there's only like one touched, I wouldn't even call that a support level. Depending, like for instance, that here is probably a support because it really went back up a lot. This level as well. However, if you look at like simply this one touch, that wouldn't really be a whole resistance. So what I mean by minor ones is that this we can see here is a minor support. So there is a support, but it's minor. So it's not as powerful and it won't affect trades as much. So also what we need to see is that, so basically price reverses we've seen from support and resistance levels. But let's look at there, for example. So here, perfect, perfect, perfect. Didn't reach it quite, you see? Didn't reach that resistance. And here, what did it do? It actually broke the resistance and went back up. So that's, people could call it a breakout, because we could enter a short trade when this support has been broken, because we think, well, the floor has been broken, so now we're going to go to the next floor. However, went back up, as we can see. So how can we stop this happening to us? It's basically by using zones. So what we call demand zones and supply zones. So, and how do we draw them? That's the whole point. Basically, to draw support zones and supply zones, we'll use the rectangle, and we'll basically take the wicks as a rectangle. So let's look at this, for example. We can see the top. So the top of that wick here, we take that into account, go all the way, and basically try to take all the wicks. So I would put it like that. So we can see we took the whole of that wick, and so that's the zone, like the critical zone. And if we look at it that way, there weren't many breakouts. There it touched properly here, as before it didn't. Nicely here as well. So that was like fake outs, what we call. It broke but went back up. Okay. Nice support, resistance again. So yeah, so that's how we draw them, is by using zones. Same for here. You can see I'm taking the wick. All right, I'm taking that wick. So price could actually go back down. So what does that mean? Is that if we've got draw zones, we could actually here, we can see it reverses, enter a short trade and put our stop loss behind the rectangle, because that takes into account the highs. However, if we've only got this, so the black line which we put first, well, stops would be much tighter, but if a wick goes up, we could get stopped easily. So that's why we use zones. So same for here. We're going to use a zone. So we can see here, I took the bottom of the candle and then taking the wick. We could say that wick. Basically, it's the wick that makes the most importance, the area where price moves. So we can see now that there was support here, here, and actually some resistance. So I hope you understand the whole thing about support and resistance. And mainly the two things to understand is to use zones instead of lines. That will help you a lot. And also that the more touches a resistance or support has, the more value and the more power it has. So I don't want to see people, for instance, I see some traders, they will actually see something going like this there, and they think because the price reversed here, it will actually reverse again there. Well, no, if before it just went like this, well, that's not really a resistance. It was just a point of reversal. However, if price did this, yes, of course, that could be a potential trade after that area of resistance. So we want multiple touches, and the more touches, the better. And support becomes resistance, don't forget. Okay, so I hope you understood that. Little bonus, by the way, remember, always use different time frames. So we've drawn support and resistance on the daily time frame here. But what we can see is, for instance, here, we've got support and resistance on lower time frames. So these are the ones we draw. And then let's look at there, for example. We had some nice little resistance here. Okay, you can see here I took the candles again, took the wicks. And yeah, that was like a nice little resistance. And on a smaller time frame. So we've got different resistance and support levels on different time frames. The bigger the time frame, the more powerful the resistance, of course, or the support. Okay.